more details from State Bank of India. But KEC is a stock which we have right now. It reported a good set of numbers. Margins improved sequentially and on a year-on-year basis. Top line growth 28%, strong order wins. Vimal Kejriwal, the MD and CEO of KEC, is now with us on the show. Thank you very much for joining in. So far, you've clocked in order wins of close to 4,500 crore rupees. Your guidance for the full year was 25,000 crore rupees. Do you maintain that? And how do you think this election will swing the order inflows, the upcoming elections?
Yeah, good afternoon, Reema. I think we are very confident about our order intake. Generally, Q1 is slightly sluggish, but we have done a 30% over last year. So I think we are pretty confident that with the current growth, especially in the India T&D market, and also in the industrial segment, which we are now seeing, we are pretty confident that we'll be able to maintain our, order guidance of 25,000 crores intake.
Okay. Mr. Kejriwal, thank you for waiting patiently. I wanted to check on the order wins that have come by in Q1, around 1,065 crore rupees, that is across segments. Can you split it up for us? What kind of segments did they see and what kind of margin guidance that you're looking at?
So Sonal, this 1,065 is more or less in T&D. Almost, I'll say 85 to 90% is in the T&D, of which again 80 to 90%, 80% I think is roughly in India itself. And then we have SAE, and the balance around 10% has come from our cables business. Typically, the margins are slightly improving, but I would still say that it would be between 8 to 10% margins.
At the EBITDA level, what are the margins that you're anticipating?
So these are typically the EBITDA level margins only.
Okay. What about your net working capital days? Your guidance was to bring it down to 110 days, but you're still at elevated levels, 126 as per Q1.
So the NWC has come down from the Q1Q by 12 days. Actually, it was at the peak, it was at almost 148 days. 110 is still our guidance, and we had basically said that we will end the financial year at 110. And I think we are still confident that we'll be able to maintain that 110 number.
Okay. So by end of this year, you will see working capital days at around 110.
Absolutely.
Okay. So, if I look at your non-T&D segment as well, that was up 22%. That did well as well this quarter. In that, which is the growth segment? Because while you're seeing civil, railways and oil and gas pipelines doing well, cables were down this time. So what would the growth driver be for the non-T&D segment for you?
So non-T&D, clearly it is a civil business. This quarter also we have grown over 60% in the civil business. Last year we had grown 70%. So our internal target even this year is to grow for the year almost 50%. So we are targeting a revenue of almost 5,000 crore from the civil business for the year. We have an order book of almost 11,000. So the main growth driver for us will be the civil business.
And what about cables, Mr. Kejriwal? That was down 7%. We've been talking about the cable industry in general. What's your take here? Will the decline continue, or do you think Q1 is an outlier?
I think it's a slight outlier, and I think the major reason was the metal prices came down significantly. So in volume terms, I think we have done 5 or 6% more than the last quarter. I think the major reason for the decline has been that we were supplying a lot to the railways electrification projects. Now, those projects have come down, so we are now looking at alternatives to replace that product, particularly the copper conductors.
So do you think this pricing pressure on cables will continue? Do you anticipate revenues to remain muted even in Q2, even though you might clock in volume growth?
Sorry. Overall, I think we will have at least a 5 or 7% growth for the year in the revenues, despite the fall in the metal prices. And clearly, we are working on improving the margins. We have also appointed a management consultant global who work on the profitability to bring it on par with the other benchmark players. So we are very clear that for the year, the profitability of cables will definitely improve.
Okay, so when you talk about benchmark margins of the industry, what would that number be?
So in cables, typically we are seeing around 10% margin. We are around 5 to 6%. So we need to pull up our margins by almost 400 basis points to bring it to the industry standards.
And have you heard back on what could be the potential avenues via which you could improve the profitability of the cables business?
So typically it would be on more targeted selling to industrial customers rather than an EPC, and also on how to basically buy better, and also the BOQs of the cables. How do you ensure that you fine tune and you are sharper on the BOQs?
Okay. Sir, so on cables, you're anticipating a 5 to 7% kind of top line growth for the full year, despite the soft start to the year. What about for the other segments, oil and gas, railways, civil you spoke about, but any guidance for the full year?
So overall, we have been talking about, doing a revenue of 20,000 plus, which would be almost, let's say, 15% plus revenue growth for the full year.
And can you break that up in terms of guidance for the individual segments? If cables is at 5 to 7,
I don't have the exact numbers, but railways is expected to be flat, okay? And the rest of them will grow, I think, around 20% or so. Cables I've already told you.
Correct.
Okay, Mr. Kejriwal, thank you so much for joining us today and detailing these numbers and more importantly, telling us the outlook going forward for KEC International. Quarter 1 has been strong and they expect this trend to continue in FY24 as well. And they